I've been trading for over 5+ years and I've tested and tried hundreds of different trading strategies. And the one strategy that I use every single day is called the break and retest. This strategy is very simple and reliable, but after thousands of live and back tested trades, I discovered the main reasons why some retests work and some fail. So in today's video, I'm going to share with you the 4 most important lessons when it comes to trading the break and retest that you can implement into your trading today. And then I'm going to show you real trades that I took to help solidify this concept. So with that being said, let's not waste any time and let's get straight into the video. I've studied and tested thousands of retests, and in today's video, I want to explain to you exactly what I've learned throughout my back testing and my personal experience while using the break and retest. And what I'm about to share within today's video has allowed me to get consistent results like this on a month-to-month basis. What I want to mention here is that this took me years of back testing, losing trades, and refining my system in order to become consistently profitable. So hopefully you guys are able to learn and take a few things away from this video so you can apply it to your own trading. So in today's video, I'm going to explain 4 key lessons that change the way I trade the break and retest. So as you can see right here, what we have is a clear uptrend in the markets. We're making higher highs, higher lows, we're making higher highs, higher lows, and we're pushing towards the upside. And now you can see price is going to come back and retest our key level. In this case, this is our 15-minute opening range high along with our 1-minute order block here as well. And you can see price comes in towards our key level. We have a very strong candle close here as well, indicating that buyers are stepping in. And what do? We enter in the markets here. We mentioned things like this is a textbook A+ setup. We have that strong candle close here as well. There's no way we can lose on this trade. This is textbook. This one should see high of day plus continuation. This is a trade that'll take 10 out of 10 times. And what happens? You can see that price ends up having a nice reaction, but ultimately fails to make a new high of day. And then we end up getting stopped out. And then we question ourselves. We're like, how did we lose on this trade? This was perfect. What did I do wrong? I did everything correct. You also say things like, this doesn't work. This strategy sucks. We didn't hit high of day. Everything was aligning. And then you also say things like, let me switch strategies since this one doesn't work. But what we have to understand is that context is everything and context matters. As you can see right here, what we have is our previous day low. This is a key level support. We broke underneath it. Now this should be used as resistance. So if we were looking for that 15-minute opening range, as you can see right here, we're on that 15-minute time frame, it would be very hard for us to long right up and towards that previous day low. Why? Because we're longing into a key resistance level. So instead of longing, we would much rather look for potential short positions off our previous day lows for a continued push back towards the downside. So you can have the perfect break and retest on the 1-minute time frame, but if the higher time frames aren't aligning and the context isn't right, it's going to be very hard for you to become consistent because you're not understanding the context and logic on why the trades move the way they do. And that's exactly what I want to explain in today's video is the 4 main lessons that I've learned throughout my years of trading the break and retest. Before we get into the rest of the lesson, I want to mention that the announcement is finally here. I'm going to be hosting a live 3-day trading event for absolutely free. I've never done one of these live events before, so this is going to be packed full of information and value. So in this 3-day trading event, I'm going to reveal my full system that has allowed me to trade full-time for a living. I'm going to reveal my exact strategy along with my edge. I've never done this before, so make sure you attend the event. And also we have multiple 8-figure verified traders coming on. I haven't seen anyone do this before, so this is going to be a 3-day event packed full of information. I've personally been working on this event for months now, so I'm super excited to show you exactly what we have in store for you guys. As for the dates, the event is running from the 28th all the way to the 30th. So make sure if you haven't already, book your spot. It's the first link in the description below, and I hope to see you guys all there. Now let's head right back into the video. So what we first have to understand is what is the trend on the higher time frames. As you can see right here, what we're doing is making higher highs, higher lows, higher highs, higher lows, and we're having a clear trend towards the upside. This is what's called a trending market. On the right hand side, what we have is range. You can see we're going from range range low to range high, back down to range low to range high. This is what's called a ranging market. So we have a trending market on the left hand side and we have a ranging market on the right hand side. And being able to identify if we're in range or if we're trending is going to be very important. And there's really only three scenarios that can occur on the higher time frames: when we're in an uptrend, as I mentioned, when we're making higher highs, higher lows, higher highs, and we're continuing to push towards the upside. In the middle, what we have is consolidation slash chop. We're essentially inside of a range, or we're in a downtrend where we're doing the opposite of an uptrend. We're making lower highs, lower lows, and we're continuing to push towards the downside. So these are the three main scenarios when understanding what's going on the higher time frame. It's a very important to understand which one we're in, because the break and retest specifically works best when we're in trending markets. And when we're talking about my top three higher time frame setups, the first one that I have is when we're in a clear trending market, when we're making higher highs, higher lows. The previous level of resistance now turns into support. As you can see, we break above this key level, turns into support, and we'll look for continuation towards the upside. This is one of my favorite higher time frame setups. This happens all the time on the higher time frames, and this is, in my opinion, one of the best higher time frame setups. Number two is when we have range or slash consolidation and we break outside the range. You could be looking for the retest. So as you can see, we have our clear level of resistance, support. As you can see here, we break above this key level of resistance. Now what we want to see is this level be used as a retest for a continuation towards the upside. So this is consolidation, and then once we break outside the consolidation, we can be looking for a potential trend in the overall direction in which we broke. And third, what I have is one of the most bullish higher time frame setup. It's called the flat top. You can see price is building up liquidity. We're having multiple touches here, so clear level of resistance, higher lows are being built. Once we break above this flat top, we can be looking for the retest for a continuation towards the upside. And this is one of the most bullish higher time frame setups. It's the flat top break, and this usually has one of the most explosive moves. So understanding the higher time frames and understanding the trend of the market is going to be key when trading the break and retest. So the second lesson I want to talk about is using areas instead of levels. As you can see right here, what I have is a clear high that's made. I have marked out this down close candle. Some people mark out the body, some people mark out the wick. In this case, I have the line drawn out, and you can see price ends up breaking towards the upside. We have some nice displacement here. We come back for the retest, but unfortunately, we actually missed the retest by a little bit, right? It comes back down. It comes very close to our retest level, but in this case, we end up missing it by a few cents, and then price ends up taking back off towards the upside. What happens in this case? Well, the issue in this case is that you're too precise. All you have is a single line marked out. You have a single line marked out on the chart. You're confused if you should draw it at this wick high. You're confused if you should draw the body, right? You're way too precise because all you're doing is having this one line in price, when the break and retest is an area in price, and we can draw the wick to the body. So one of the most common mistakes when it comes to trading the break and retest is most people think that it's just a level in price, when in fact the break and retest is an area of price instead of a level. And what the result is, you end up missing the trade because you have this line drawn out. You're way too precise. You're only going to take the trade if it hits the key level. In this case, it ends up retesting this down close candle on the order block. You end up missing it by just a few cents, and price ends up gravitating exactly what you thought it was going to do. Another scenario is that we end up getting stopped out too early. So as you can see in this case, we have a nice push towards the upside. We're coming all the way back down, but in this case, our break and retest level, we actually close underneath it. So it closes underneath this level. Most people, if you have a very tight stop loss, you end up stopping out underneath a candle close underneath your key level. Some people are way too precise. They're looking for absolute precision to the cent. And what happens? You end up getting stopped out because you have a line drawn out, and then price ends up gravitating right back up and towards high of day and above. But you ended up not capturing this trade because you're way too precise and you wanted to see price respect your level. But in this case, it broke right underneath, and then ultimately price continued higher. So what is the solution to this problem? What we're going to do is focus on areas of price instead of levels. If we draw just a level in this case, could we use this level? Yes, we could, but you can see price kind of breaks through it, right? You have this retest here, but ultimately kind of breaks underneath, right? It's not as clear, whereas if you draw it in area of price, it's so much more clean, and it gives us a little bit more room to allow that trade to develop. So as you can see, I've drawn out this area of price now. We have our key level of resistance. Once we break above, you can see nice clean level of support. You can see price is holding this area. Once we break back underneath, couple retests short towards the downside. Once we break back above again, you can see this level is now holding for this continued push towards the upside. And this is what you want to do. You want to mark out areas areas of price instead of levels. When I first started trading, I used levels and I was always so confused on whether to mark it out from the wick or the body. But what I realized, it's the wick to the body. That's your key area of price that needs to be respected. So when I started drawing out areas, I actually had a lot more precision than drawing out levels because I was giving the trade more room to develop. So what happens when we draw out areas of price instead of levels? What we have is clear risk. We have clear risk, so it's very easy to identify the risk level because we know it's from the wick to the body instead of breaking underneath a strict level. We have barely any fake outs because now we're giving it more room to let the trade play out instead of getting faked out, along with removing stress because we don't have to monitor every single 1 minute candle around the level of price. We're going to have that area of price and it's going to give us, as I mentioned, more wiggle room to let that trade breathe and let it play out. Lesson 3. What I have here is two options. I have option A and option B. Option A on the left hand side is we have a break and retest. We have that break above. We're consolidating above that retest level. And option B is when we have that clear break above with displacement. What do we expect to be higher probability? Option A or option B? If you guessed option B, you would be correct. As you can see in this case, the best trades happen when there's displacement and there's continuation above our retest level. So option A ultimately ends up failing. You can see it bases above our break and retest level, but no real displacement, and then ultimately fails and gravitates back towards the downside. Whereas option B, we have that nice clean break with displacement. We have that retest, and this is the one that ultimately has continuation back towards the upside. And the difference in between these two is what I call displacement. And displacement is a very important concept, especially when it comes to the break and retest. The best trades will have displacement, which just means a form of momentum or continuation, whereas option A in this case has a lack of displacement, so it's going to be lower probability. So what does displacement mean and how can we find displacement when it comes to trading the break and retest? So when we're trading the break and retest, what we need here is a swing high and a swing low. What we want to see is a break of structure. Once we get this break of structure, we can be looking for what's called displacement, and displacement can be found in two different ways: bullish gap / fair value gap or volume. So the first thing is going to be the bullish gap / fair value gap, and it's essentially this 3 candle sequence. I'm sure if you guys know what fair value gaps are, it's basically the gap that's created from the top of the first candle to the bottom of the third candle. If you can draw a gap in between these candles, that's what's called a fair value gap. If you can't draw a gap in between these candles, then there's no fair value gap, and that would signal a lack of displacement. So in this case, the easiest way to find displacement is to see if there's this 3 candle sequence, which is your fair value gap / bullish gap. If you guys want me to make a full video on displacement along with fair value gaps, drop that in the comment section below. The second is volume as well. In this case, I don't have any charts, but what you want to see is high volume. If we're breaking outside the retest level with high volume, this is usually a good indication there's displacement and we can expect this retest to be valid, and we could be looking for a continuation towards the upside. So the reason why we want to be identifying displacement is because there's going to be fewer fake outs. Volume tells a story. If we have displacement, that's a good sign we'll have continuation. Whenever we have fewer fake outs, that usually confirms the breakout towards the upside, and then we can be looking for the break and retest. And the third is a higher probability trade. If we do have displacement with a lot of volume, we can expect these trades to have continuation towards the upside. So as you can see in this case right here, what we have is a clean break and retest. You can see price is breaking towards the upside. We have some displacement here as well, and now price is coming right back down towards our entry level along with our retest. Do we just buy at this key level blindly, right? If we enter right here, right, we have this kind of hammer stick candle forming. We're at our retest level. Do we just buy blindly hoping that price gravitates back towards the upside? If you mentioned that we would just buy, you would be incorrect in this case, because what we're doing is we're not waiting for our entry to validate our trade thesis. So as you can see, previous level of resistance, break above this level, we have that nice hammer stick candle, but ultimately no buyer stepped in and we fail, and then we end up hitting our stop loss. So our issue in this case is we're not waiting for our confirmation entry, and our entry is one of the most important things as well when it comes to trading the break and retest. And there's 2 different entry models that I look for. What I have in this case is our conservative entry model along with our most conservative entry model. What we have is a clear break and retest. You can see price is making a new high, higher lows, we break above, we also have displacement here. What we want to see is buyers stepping in. So buyers stepping in is a form of a hammer stick candle or any big lower wicks that we have. This is the conservative entry model. This is something that I look for. It's essentially called buyers stepping in. If we have multiple lower wicks right at our retest level, this is when we could be looking for continuation back towards the upside, right? If we can see the buyers stepping in right off that retest. And then their second entry model, which is is my personal favorite. It's that conservative entry model along with confirmation candle, which shows that buyers are stepping in. So it's basically buyers stepping in plus that confirmation candle. So it's that third candle that confirms price wants to push back higher. In this case, what we have is the third candle, which ends up closing above its second candle. And if it closes above that first candle, even better. So this is that 3 candle sequence. I've talked about this plenty of times on my channel. This is one of the most powerful entry models, is understanding this 3 pattern sequence. So with that being said, I've talked about the 4 different lessons that I feel like are the most important when it comes to trading the break and retest. We talked about the higher time frames and understanding the trend of the market. We talked about using areas of price instead of levels. We also just talked about displacement, of course, the entry models as well. And now with that being said, let's hop onto the charts to see exactly what this looks like in real time. So as you can see right here, I'm on my first example. We're on Nvidia coming into market open. Just to give us a little bit more context, we recently just had earnings, a little bit of reaction off of our all-time highs, and now we're pushing towards the downside. So you can clearly see we're underneath this earnings low, which is a very key level. If you guys don't know, earnings happens once a quarter. So these earnings levels are very key, and there's a lot of volume and liquidity around these levels. So in this case, you can see we're breaking underneath its previous day lows. We're now underneath its earnings lows here as well. So for Nvidia, we're primarily going to be looking for the pop and fade for continuation towards the downside, just based off of this pre-market action that we have. So key levels that we could have marked out is that earnings low, and we could also mark out our previous day lows here as well. But now let's go on to the lower time frames. So as you can see right here, I have the first 15 minutes of market open played out. If I go into the 1-minute time frame, you can see right here that Nvidia is pushing nicely towards the upside, right? We're having that 1-minute opening range break actually towards the upside. This one, not real too much displacement, not really a clear retest level, but you can see now this one is driving towards the upside. But what would we want to do instead of looking for longs, right? We don't really want to be longing right into a key resistance level, which in this case is your earnings low, right? So longs really for us are off the table coming to market open, just because we have a clear level of resistance above. What we'd much rather look for is a potential kind of retest short towards the downside, just because we want to be in line with the higher time frames. So let's keep playing out the tape. So as you can see right here for Nvidia, we end up having this nice push towards the upside, ultimately rejecting off of our earnings low. You can see multiple wicks rejecting off this area now, and now we're actually pushing back towards the downside. So for Nvidia, right, clear rejections on the 1-minute time frame. If we go back onto the 15-minute time frame here now as well, you can see price ends up pushing right back into this earnings low, clear rejections off this level, and now we're continuing to push back towards the downside. So what will we be looking for in this case? So now what will we be looking for in this case? We recently rejected off of our retest level. Now we're going to be looking for continuation down in towards low of day and below. So as for the levels that I have marked out, I can mark out this. This is a pre-market level, multiple touches here as well. So now what we'd be looking for is really the break back underneath your opening range low on the 1-minute time frame for this continued pushback towards the downside. So as you can see here on Nvidia, we're finally breaking back underneath our key level now. Multiple touches here. You can see pushing back towards the downside, a couple wicks here. This is where I go in short with a stop just to break above. And now I can be looking for low of day plus continuation towards the downside. So now we can play out the tape. And as you can see, Nvidia ended up having a nice push towards the downside. Once it rejected off this earnings low, this could have been a more aggressive entry, but we are waiting for the breakback underneath that 170. And this also provided a nice opportunity. Plus it had continuation lower as well. Now with this being said, let's go on to the next example that I have. Okay, so the next example we have is here on Tesla. You can see we're clearly breaking above your previous day highs here. We're clearly breaking above the high that we had from 2 days ago. So we're very bullish on this ticker. We actually have to go back to the left to mark out key levels. In this case, we can mark out this key pivot high. Coming to market open, we're going to be looking for a couple things. Number one, either the retest all the way back down and towards that 342, or now it's going to be the break above our 349 for continuation towards the upside. As the next levels towards the highs is going to be actually be all the way back up and towards this 355. This is going to be the key level we have. So now let's go on to the lower time frames. You can see right off the bat here on Tesla, we're getting immediate buyers stepping in right off this 348 coming to market open. So now what we'll be looking for is really the hold of your 348 for continuation higher. The reason why we could be looking for this level is because we showed some strong price action, higher time frame key level as well, and we still have room up and towards that 355. You can see some buyers stepping in right off this 348. As you can see right here, this is my confirmation candle. Price closed above its previous candle. This is where I personally got in long with a stop loss just to break below, and my take profit was all the way back up and towards high of day along with this 355 key level. Now we can play out the tape. And you can see right there for Tesla, we end up having a super solid push towards the upside based off of this 348. And we end up having this nice continuation up and towards that 355. So as you can see right there, those were two good examples of using all the concepts that I taught in this video, starting from the higher time frame trends to using areas of price instead of levels and using those confirmation entries as well. So with that being said, I hope you guys did enjoy the video. If you did, appreciate if you guys drop me a like. If you guys haven't joined already, the waitlist for the event coming at the end of the month, make sure to do so. And I'll see you guys all next week for a brand new video. Peace.